What's up, everybody? Welcome to episode number 7 of the Bag Talk Show. Happy Wednesday, happy hump day. Hopefully you guys are all staying safe and are ready for an amazing episode of the Bag Talk Show, man. Let's get started, you feel me?
Nice.
You ready for it?
Yo, bro, are they ready for us?
I mean, we'll find out.
Facts.
We'll find out. But before we get started, like always, make sure you're subscribed to the channel. You guys had that ring bell notified, right? And you guys like the video, right? Because the more you like the video, the more YouTube pushes content like us out there. So let's just dive into it, right? Today, we're going to talk about current events. Then we're going to dive into what picks we have actually made. Because we made some picks.
Definitely made some moves, bro.
Yeah, for sure.
Made some big moves.
Because, we tell you guys to buy stuff when it's low. So we want to let you guys know we're not just saying stuff. We actually put our money where our mouth is, So,
Always.
And then we're going to talk about upcoming news as well. So let's just talk about what's going on right now, right? So to kick it off, obviously, it's Super Bowl weekend in like a week and a half, I believe, something like that,
yeah.
right?
Right?
So right now, everyone's trying to buy tickets, right? But the reason why this is important, you guys might be thinking it's a financial show, what are y'all doing? But to be honest with you guys, inflation is actually causing ticket prices to be absolutely insane right now, bro. Like,
is this even, I don't follow football. I told y'all I'm a better basketball player than LeBron, Kobe. So,
yeah.
For me, I'm a basketball god. You know what I'm saying?
Yeah.
So what I'm asking you is like, is this Super Bowl even supposed to be like popping like that?
Yeah. I apologize. Honestly, I actually apologize for my football man. For my football fans out there, like my man's a little slow. That's all it is. There's other things besides basketball, bro. Football is huge.
That, but like these ticket prices just crazy, bro.
No, absolutely. All right, so in that sense, you're absolutely right. I won't lie to you, right? I know you're better than Kobe, better than Bron, better than MJ. Like I gotta ride for my mans out here. You know what I'm saying?
On,
but at the end of the day, ticket prices are insane, right? As you guys see on your screen right now. Ticket prices are going at $5,500, and that's for nosebleeds. Like that's absolutely insane when you really think about it, right? Like, at the end of the day, right now, we know inflation is absolutely crazy, but to save $5,000 for nosebleeds,
no, that's wild.
Like, it's actually higher than every other Super Bowl, and every year it goes up, of course, but this is obviously pretty high,
Yeah, I mean, these ticket prices are up as much as 100%, bro.
Yeah.
100%.
And that's what makes it crazy, right? So we talked about inflation with you guys before, and you guys understand what it is by now, but not only is it affecting gas, not only is it affecting like grocery stores, even just regular everyday purchases, but now you see it affecting actually the sports industry, right? So I think it's pretty cool that it's not cool that you pay more, but it's pretty cool that you can sometimes combine finance with sports. Like, even entertainment, when you go to concerts, it's going to be the same thing. You think if, like, Drake puts a concert on, he's not going to have to, increase his prices more?
For sure, bro. Everything gets affected. Like, literally, every industry gets affected in an inflationary environment like this.
Exactly.
High inflationary, yeah.
Exactly. So now that covers basically the inflation news that's going on right now, right? That covers the sports world. But let's... Go ahead.
I just wanted to remind them, like we said, inflation hit all-time highs.
Yep.
Last year, like it set records that it hasn't set in over 40 years.
Yeah.
Yeah. 7%.
And that's scary, right? And that we talked about this before. We say it all the time. But that's why you have to kind of stay up to date with what the news is saying, right? Because inflation goes up, interest rates, they have to raise them up, right? Because they have to figure out a way to balance it. That's cool down the economy, right?
Yeah.
We talked about it last episode. Remember that money printing gift that you guys saw? Right. That's a part of inflation.
That's a fact. So,
Yeah. But in terms of the stock market, right? Yeah. There's a lot that's happening right now, right? So if you really break it down, the S&P 500, right, and NASDAQ actually had its worst month, bro, since March of 2020.
So their worst month since Corona hit. Mm-hmm. And everybody was panicking. Everybody panicked in Corona, because the market crashed in Corona.
Yep.
Right?
Yep. And it literally crashed in March.
Yeah. That's facts. And like we said, this time, what we saw recently was a market correction.
Yeah.
Right? And everybody was panicking the same way. Mm-hmm. So it opened up a lot of opportunities. And, we talked to everybody about taking advantage of these opportunities because we know what goes down must come up, especially when it comes to the markets.
That's a fact. Honestly, we actually had people slide into our DMs and they were reaching out to us being like, "Yo, this is not a crash, bro. This is a correction." Yada yada. Guys, we understand. Yeah, we understand. It's definitely a correction, right? Like when you look at it, in fact, there's actually been over 66 or 65 corrections since 1971 of the NASDAQ. Right? So when you look at it, yes, it's normal to have pullbacks like this. We actually showed a chart, what was it, last video or the video before on Wednesday, where we actually showed how it's actually healthy to see stuff. Remember, you were like, "Is it healthy?" And I was like, "Yeah, it's actually healthy."
Yeah, I wanted to reiterate for them. Like, I wanted to hear that. Like, once again, is it healthy?
Exactly, it is healthy. It is very healthy.
Because I'm tired of people panicking.
Yeah, because honestly, this is what happens, right? Like, when you think about it, when stocks are going up, 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 everyone's like, "Yo, this is amazing. I make so much money. I'm a great investor." Yada yada yada. But when they go back down, everyone's like, "I'm not a great investor anymore. I'm panicking. I'm gonna sell. I don't wanna lose the money I made." Yo, just relax and stay calm. We talked about it in the video before, and we're gonna say it again. You know?
Yeah, for sure. Like, we want to stress you guys holding great companies. You know, you got to hold anything that's quality.
Yeah.
You know, like, it doesn't mean never sell any stock. We're saying hold quality. Because when you should be selling stocks that are bad quality. You shouldn't have had them in the first place.
Right.
But, you know, we all, especially in the beginning of an investing journey, you're going to invest into some bad companies if you don't know better.
I'm not even afraid to say it. When I first started investing, I think I told you the story about Kodak. Like, when I first started investing, and shout out to Danielle if you're watching this right now, you were right next to me. I bought Kodak as my first stock, right? I saw a bunch of news, and I was like, yo, this company's about to go crazy. And then, I'm not even gonna lie, it actually went up. As soon as I bought it, in like the first, I think, 20 minutes, I made like $200. And I was like, yo, this is investing? I'm the best investor there is. Like, I'm amazing at this.
I'm crying.
But then, everyone who's familiar with the city, right, like New York City, just imagine this. Your boy walked from Grand Central, which I laugh at this every time. Your boy walked from Grand Central, right? And he went to Midtown on like 48th Street and 7th. Bro, and on that walk there and walk back, remember, I made 200. I ended up losing 600. And I was like, yo, what happened? And
I thought it was all sweet.
Yeah, and that's really what it is, right? Like, at the end of the day, that was not a smart investment. It was not a quality company. I didn't research anything. I didn't listen to Tyrell. He says all the time, like, balance sheets, financial statements, company, you know, C-suite, all that. I didn't look. I read the news, and then they were like, yo, this is going to be amazing. Boom.
And that's the thing. Media will do that. Like, because, like, think about it. A lot of companies work with media.
Yeah.
You understand? Like, there's a lot of manipulation that goes on.
There's a pump and dump.
Yeah.
Honestly.
You know, there's a lot of market manipulation that goes on. You have to do your own research at the end of the day. You have to look at fundamentals on your own, technical analysis on your own, you know? And then it's funny, like, Corona in itself, a lot of people felt like they were great investors because everything was going up. It's the easiest environment to invest in, to trade in.
Everyone's great when the market goes up, but when it pulls back, are you still going to stick to your principles, or do you even have principles?
Exactly. You probably didn't. A lot of people got into the market during like the correction, during Corona period. You know, especially with the stimulus checks and stuff. A lot of the stuff that caused
money
inflation,
printed, boy. That money printed.
As they're dishing out money. You know, everybody's like, yo, I got a stimmy. People got PPP loans.
Yeah.
I know some people that was going crazy over PPP loans.
Nah, honestly.
You know what I mean? But like, you know, people are using that to invest, and that's why the market ran up.
Yeah, and honestly, this is the thing, right? Like, you might not believe us sometimes when you're like, yo, they don't know what they're talking about, even though we literally do our research. So listen to what this article has to say, and this is from Goldman, right? Like, Goldman Sachs says it. So an investor buying the S&P 500 10% below its high, regardless of whether it was through the tough or thorough, right, would have netted a median return of 15% over the next 12 months, right? And this dates back to 1950. So when you really think about it, like, if you're buying below its high, that's really what it's saying. If you're buying below its high, you're going to actually end up making a return of about 15%. Yeah. It's simple as that.
It's like, you have to be opportunistic when it comes to investing. You have to be opportunistic. Like, there's been 33 corrections in the S&P 500 since 1950.
Yo, just once again, say that very slowly for them, bro, because I feel like people panic.
Yeah, so since 1950, there have been 33 corrections.
Exactly.
We talked about what a correction is. It's when a market falls 10%, between 10 and 20% from its recent high.
Exactly.
And we saw that happen in the markets just recently.
Yeah.
And so think about it. Since 1950, there's been 33 corrections, and we've always bounced back.
Remember that chart that we showed like earlier? It was literally showing like, oh, the 2000, crash, all-time highs after that. 2008 crash, all-time highs after that. Like, and those are crashes, right? Those are not corrections. And listen, we're not like some gurus sitting up here that we're going to predict the future. Yes, can the market go down? Yes, right? It can definitely continue to go down. But if you follow the most basic principles, you'll be all right.
Yeah, for sure.
For real, honestly.
If you're an opportunistic investor, you will see a greater return than people who are buying at highs.
Yep.
Because it's like, obviously, when everything is lit, when the market is going skyrocket high, everybody's putting their money in. When there's a pullback, everybody's panicking and they're selling.
Yep.
It's backwards. They're buying high and selling low.
And honestly, it doesn't make any sense to me personally, but that's why it's important to have principles. I think that's why it's very important to have principles. And that should cover the stock market news, right? We want to talk about real estate as well, right? I know you probably want to tackle this one because it was honestly your topic here. So go ahead.
Yeah. So real estate, they're expecting that real estate will continue to increase, but the appreciation will slow down because as we've seen in the pandemic, appreciation was appreciation was going crazy. People,
I literally just talked to people on the phone, right? This was I believe I had the conversation 3 days ago, essentially, or it was over the weekend, right? And basically I was talking to someone who bought property in the South, right? And they just bought it. They bought it for I think like $375. That thing's at $420 already. Mind you, they bought this in November. It hasn't even been like 6 months.
Bro.
And think about the appreciation because everything's going up.
Everything's going up, you know what I mean? And people thought like, okay, when they raise interest rates, that means that the house prices will fall.
Yep.
Not to say that house prices might not correct a little bit, but people think that you're going to have house prices at where it was pre-pandemic.
Yeah, that's the thing.
That's probably not going to happen. Like, you got to think about why that's unrealistic.
Right.
Like, we are 5 million homes behind the demand. Right?
And supply demand at the end of the day. If he has something, right, and he only has like 5 things available, right, 5 homes available, and there's like 20 of us online, right, and I'm like, yo, I'll pay this much, we're all bidding for 5 homes, there's 20 of us. The supply is this high, the demand is even ridiculous. Like, demand's over here, supply's over here. Yo, he controls it. It's why would he ever sell it for cheaper than it was before? Why?
And a lot of times when it comes to like real estate in the markets, we depend on older generations moving out of their homes for people like us, like, millennials can move in. Boomers are not even moving out because of the way that the real estate market has been. So they're also holding up the little supply that we do have.
Yeah.
And it's hard to build homes. New construction is not really going on because of the supply chain issues.
Yeah.
And the Great Resignation.
Yeah.
The worker shortage. So who's really going to even be building these homes if people are not trying to work?
And that's why. Sorry, go ahead. I didn't mean to cut you off.
I was going to say, like, and when they do build it, it's expensive to build. So it's like we can't even produce homes at the rate that we need, and we're already so far behind.
Right. So moral of the story, honestly, is don't sit back and just wait for the perfect price, right? If your numbers make sense, we said this earlier, we're going to say it again, your numbers make sense, you've done your research, you have reserve capital ready to go, yo, do your thing, bro. Like, if you've done your research on it, do your thing. Don't let something just sit back and be like, yo, I'm waiting for the perfect moment. There is no perfect moment.
There's a correlation between like all of these markets when it comes to investing, like think about it. We keep talking about buying quality, knowing your numbers.
Yes.
That applies to real estate, that applies to stocks, that applies to crypto. At the end of the day, you gotta buy quality and know your numbers.
I thought we were about to say the same thing again. I was about to say at the end of the day, numbers don't lie when it comes to finance stuff. That's really what it is. In terms of finance, investing, real estate, crypto, stocks, whatever it may be, you gotta know your numbers. But in terms of crypto, let's talk about it because there's been some good news. I mean, I think it's good news personally.
Yeah, for sure.
So you want to kick that off again?
Yeah, you talking about Sony, right?
Absolutely.
Yeah,
Absolutely. So they made some big moves.
They're making big moves. So a lot of these companies are like making their transitions into the metaverse. Some of them are doing it in sneaky ways.
Yeah.
Like it's like a backdoor way. You just know everybody's plotting. And yo, remember that video? I don't know if I brought it up in this channel before. Remember like the video with Bill Gates?
Yes. I know I brought it up earlier because you posted it on the gram, and I was like, people literally made fun of Bill Gates, right? Before when he was like this it was a while ago when he was talking about the internet. Yeah, when he was talking about the internet, and it was like, what is the internet? How is it even gonna work?
They was joking on him, basically saying like, yeah, bro, that internet sounds. Internet stuff sounds crazy.
And remember, this is like what 1995 you said?
95. Bro.
Yeah, so literally when we were born, like people used to make fun of the internet, and this one weird guy named Bill Gates was pitching about it this whole time, right? Look where the internet is now.
We watched that video on the internet.
You guys are watching this right now.
On the internet.
You know
what I'm saying? So it's the same thing with Metaverse. Like sometimes an idea sounds crazy, but trust me, these companies are positioning themselves, and one of them will be like
Sony, for example. Yep.
You know, they released a virtual reality headset, the PlayStation VR2, and it's compatible with the PS5. And it's a virtual reality headset. What is the metaverse about? Virtual reality.
I'm not gonna lie, like this stuff's like actually like kind of creeps me out, because when I think about it, like virtual reality, I really, really do think we're like headed towards all the shows we used to watch. Like, you guys remember like Dexter and all like the cartoon.
Dexter, young boy.
Honestly,
that's my little brother, y'all.
We gotta talk about this. Miss Ryan, if you're watching this, can you talk to your son, please? You know.
I know he ain't just shout out my mom. I know he just shout out my mom's way.
No, but that's really what it's so scary. Like when you really think about it, it's actually very scary. Like everything is The Simpsons. Like everything is repeating. Yeah. So robots, it's all coming to reality. So it's like the way I think about it. I'm not trying to go on a no conspiracy type of thing.
Listen, I just want to say, you mentioned robots. You seen what Elon Musk said about robots, right?
What did he say?
He's saying he has a huge focus on robots.
Oh, right. He's gonna switch. Tesla. I was about to say he's switching over to robots rather than EVs, right?
He has a huge focus on that.
Yeah. Sure. Which not saying he's not going to focus on EVs, but like he's focused on robots more. Yeah, I did see that. But like in terms of this whole thing, like think about it, yo. Like we could stay home and go attend concerts. We could stay home and go to like sporting events.
You could stay home and gamble at a casino.
Right. But if you think about it, that's kind of scary, because just having a conversation on this stuff, right, is like we're in person talking. Right? Like, I think we have to go out and talk. But Corona, what it did, it made people kind of awkward in a sense. Because all you're doing now is stay home. Like, you don't want to really go out and meet people. You don't want to, network. But then you include the whole virtual reality, metaverse. It kind of goes hand in hand. Like, it allows you to stay home. And now people are getting more and more awkward, right? Like, there's the mental health gap. But the mental health problem is only increasing.
Bro, and we've been heading in this direction for a long time.
It just made it more clear. Corona just actually accelerated everything.
Because you gotta really think about how we've been affected by social media. It's already this stuff has been on the way for the longest.
Speaking of social media, that's why Facebook was getting so much hate. Like Facebook and Instagram, like I know they're together essentially. Like people were actually complaining to Instagram and Facebook regulators. Essentially, were complaining because it was like, yo, when people like stuff or comment stuff, it makes people actually feel like they're not as important when they don't get the same amount of likes as their peers, or the same amount of comments as their peers, which is mental health aspect again.
For sure. And then we talk about interaction, and we talk about the work from home environment, and you see like, Microsoft already said it. We posted this on the Back Talk Instagram page. You can follow that at the Back Talk Show on Instagram. But
nice little plug. I see it.
Sure, you feel me? Working on that. So like Microsoft, they already said they had plans on holding like virtual meetings for their employees. Like,
absolutely.
Meeting in the metaverse, in a meta office.
I said this. I remember I was like doing the whole alumni thing with UB earlier, right? So it was it was basically the metaverse. Like we were in a bunch of tables and our avatars, and we would actually move our avatar to different tables, and they would talk to us.
That's really a metaverse concept, bro. Like everything is heading in that direction.
Which is crazy because Sony, which is a huge company, is now putting its name on it, right?
Yeah, and think about it. Sony, Microsoft, these are competitors in the gaming space.
Yep.
So Microsoft already has made it super clear that they're headed into the metaverse direction. Sony has to compete. Microsoft already talked about their potential to acquire Activision.
Yep, which is the whole gaming thing again, right?
Yeah, you think about it. We got Call of Duty coming to Microsoft if that deal goes through.
Yep, exactly.
Bro.
Exactly. It's a lot going on in the gaming world, and these two companies are on top of it. That's really what it comes down to.
For sure.
And now go into the topic that we mentioned earlier, social media. Let's just talk about that, right? It kind of leads right into it. Facebook's dream of creating its own global cryptocurrency officially comes to an end, and that was reported by CNN. So you guys remember like Facebook, this whole thing about Libra coin? You remember that back in the day? It was 2019?
Yeah.
Right? They were basically trying to launch.
Yeah,
they were trying to launch this cryptocurrency. They were trying to get involved in the cryptocurrency plan essentially, and be like, yo, we're gonna come up with our own coin and we're gonna promote it to our Facebook network, right? And it was supposed to be great. They were like, yo, we're gonna make it global because it's already a global company. They already have all the data on it. But then,
it's supposed to be a stable coin.
Yep. And then look what they're saying. Regulators come in and they're like, nah, yo, like we don't like this. We don't like what you're doing. Like Facebook was already facing problems with hackers, right? Because there was a lot of stuff being hacked on their account. How do you keep people safe? Are you actually doing the whole mental health thing we were talking about? It faced a lot of scrutiny because of Instagram. So now this comes out, it's no secret here, right?
And selling your data.
Yeah, exactly. Yeah. So I don't think it's a secret. Like when you get involved in cryptocurrency, you have to, just expect some backlash. I think that Facebook thing is. I think it's big. I'm not gonna lie. I think it's gonna affect them a lot.
You think it's gonna affect Meta a lot?
I think it's gonna affect Meta a lot. Yes, because I think that that's gonna cause some type of damage to them. Right. That if I just don't see, because Facebook's always target number one for I'm not trying to be mean, but all these old regulators out there, it's always target number one. You remember the whole news that had with who's the CEO of Facebook? Zuck, right?
Yeah, Mark Zuckerberg.
Yeah, so when one of the regulators was like, what does Facebook do? And then Zuck started smiling. Yeah, and he's like, how does Facebook make money? And Zuck was like, we do ads. And he was like, what do you mean? You're a social media company. Think about it. People don't understand Facebook. So when they come out into one, you're already not understanding the actual concept of the business. Now you introduce a whole cryptocurrency network to it. You're just playing with fire at this point, So I think that's news in itself. And that's something to just think about. Every company gets involved in crypto, you're going to have to expect something.
That's a fact. I think Meta has a bright future.
Absolutely.
Yeah, I just think that,
they beat earnings.
Yeah, because they're... Yeah, exactly. They beat earnings, and they might take themselves out of this venture right here with that cryptocurrency. But when you think about the fact that they have WhatsApp,
WhatsApp, Instagram, at the end of the day, we talk about it all the time because we're getting into that space of TikTok and Instagram and Facebook, all that. It's still the biggest network.
That's what I'm saying.
You're not messing with that.
They gotta hold on the top 4 apps. They got 4 out of the top 10 apps.
Yeah, no, it's
top 10 download apps. So
clearly they know what they're doing. Essentially, clearly they know what they're doing.
Yeah, for sure.
And in terms of scrutiny, let's talk about this, right? The cryptocurrency regulations, all that stuff. When you look into it, India says that it will tax cryptocurrency and create its own digital rupee, right? So for those who don't know, rupee is the currency they use. So they're saying we're going to go digital. And India is actually late in the game. They're actually the latest, largest company to get involved in cryptocurrency. Yeah, so they're pretty late to it.
Yeah, because a lot of countries are developing their own coin. You know what I'm saying?
Yeah.
So I think about 80 something countries have already developed their own digital coin.
Yeah.
The U.S. There's news that the U.S. is thinking about doing the same thing. Holding a United States coin, because there's a whole push right now for everything to go digital. Cash is trash, but
honestly.
People are not really using cash as much. I know you don't really use cash.
I never have cash on me,
ever. So
never.
It only makes sense for these countries to start making digital currency. Because the physics,
and the whole taxation is going to be a part of it. They're not going to let it not get taxed. They're just going to regulate it.
Nah, it's the same thing as the dollar. They're just making digital dollars. It's nothing different. The government is all over that one. You feel me?
Yep. Now, in terms of, obviously, you guys that's what we want to cover in terms of, current news. So we talked about crypto, we talked about real estate, we talked about stocks, and that's a perfect translation, right, into what we're talking about now, our picks. So when we talked about before, right, when you want to invest in quality, great companies, right, at the end of the day, we mentioned 2 companies, Microsoft, Apple, and then we said it earlier, if you want, funds, you can go to ETFs, right? QQQ, VOO, VTI. But over here, we actually bought some Microsoft, Apple at low points because at the end of the day, we believe in them. So I know you got Microsoft, right? So you want to talk about that a little bit?
Yeah. I saw Microsoft. So first of all, I've been watching Microsoft since it was when it was at its all-time high of $350. So Microsoft's at $350, and I'm like, one thing I don't do, one thing Newski don't do, we don't buy things at all-time highs.
It's just foolish.
It's just
honestly,
foolish.
At the end of the day.
It's backwards. So we know, we look at our technicals, we look at our different indicators, and we do our research. And so I've been watching Microsoft. I've been waiting for it to hit somewhere in the 290s.
Yeah.
And then
because that means it had a pullback of a decent percentage, honestly.
Exactly. So then I'm like, okay, when Microsoft was falling, first of all, it fell when it fell around the time they were talking about the Activision news.
Yeah.
When they were thinking about acquiring Activision, there was a bit of a fall there. But then obviously we saw the whole market fell, recently. So then Microsoft started reacting just like everything else did. The only thing is these quality companies like Microsoft, Apple, they don't react as heavily as some.
If you see company at the end of the day, I love it, but Square or PayPal, they react way more heavily to news than Microsoft or Apple because at the end of the day, when you look at Microsoft and Apple, they're stable. They have way better balance sheets, right? They're more stable in the sense of they've been proven.
They have the top 2 market caps. Like,
yeah,
Apple's the biggest market cap ever of any company.
Yeah.
Microsoft is second.
Yeah, and that's really what it is. So like, if you guys, right, so this chart that you see on your screen right now, if you guys look at it, it's actually showing the different points that they were, the low point and the high point. So if you just bought, when we were talking about this earlier, at 276, and now it's at 310 range, that's a return of 12%.
Already,
like
in 8 days.
Yeah, like if you hold it, what we say all the time, if you hold it for a long period of time, like if you hold it for 2, 3, 4, 5 years, you're gonna see returns. And you just keep doing the DCA method that we talked about earlier. It's even gonna help you out.
Listen, bro, when Microsoft trailed below its 200-day EMA, so its 200-day EMA I was looking at was around 295 area.
EMA, explain that, exponential moving average.
Exponential moving average. So it's the average price that it's had over a certain amount of time. So the 200-day EMA,
yep,
it's an average price that it had over the last 200 days.
Exactly.
But it's weighted more heavily on the more recent prices for EMA.
Yep.
Okay. There's an SMA, which is just the average over the time. But EMA they pay more attention to the more recent prices. It's still the average, but anyway, so yes. So once it started trailing below its 200-day EMA, I was like, oh, hold on, let me watch this. So I'm watching it. I'm watching Microsoft. Once I see it go down to around 276, I'm like, yeah, this is great. Because that Microsoft had an all-time high of 350. From 350 to 276, that was about 20%.
Yeah.
Was it?
I'm lacking on my numbers right now. But yeah, any time, like, we have a simple formula, right? So you guys are looking to get into certain companies. Anytime it falls below 10%, 20%, and 30% of its all-time highs, it's good entry points. And then you can just average down from there.
Yeah, plus the thing is, when it comes to these companies, we know their trends. Like Microsoft, typically, when there's pullbacks with Microsoft, it's usually about 12%-ish, right? Throughout its history.
Yeah, when we looked at it. Yep.
Yeah, when we looked at it. So once I saw it go down about 20% off its all-time high, I said,
that's a good time.
Yeah, like what? I'm diving in. So I threw in a good amount of money at 276, and then boom, skyrocketed right back up. It bounced up.
Yeah, and even if it is a pullback, you just DC it, and that honestly is even Apple. It's the same. It's the same thing, right? Mm-hmm. Like Apple, we're gonna put the chart up right here. So if you look at it, it's the same type of theory to it. 154 was the low. It went up to 174, which is a return about 13% in the same time period. So look, it's funny. We said Microsoft was what, 12%, Apple was 13%. These are good companies, and the average return in the stock market is just 10%. So these two stocks are giving you returns of more than that in just 8 days. So if you hold it and continue to do the DCA, you're gonna be straight.
That's because when these things dip, these institutions buy it up, bro.
Yep.
Like everybody and their mama know Apple and Microsoft is not going nowhere. Nobody loses sleep over Apple and Microsoft.
Yeah, and honestly, and the crazy part about this stuff, right, is like just look at, like, because you said it, you want to look at fundamentals. So look at what the company's doing. AirPods, the thing that everyone loves. It's ridiculous. AirPods revenue in 2020, it actually beat Uber's revenue. It beats Twitter, Shopify, Snapchat, Spotify. Like, it's ridiculous.
And that's just AirPods, the wearable.
Yeah, that's not Apple.
Apple. Like, obviously Apple beat everything, but we talking about just AirPods.
Yeah.
They said, yo, I'm gonna let AirPods do my dirty work.
And it's crazy.
Beat out all those amazing companies.
And the other piece of Apple is it's innovating, right? Like the news app on Apple, they're actually that's the largest and most popular app in the UK. And they're actually testing out the news app. They're promoting it more in San Fran now, in like the Bay Area in general. Yeah. So just think about that, right? They're innovating. They're gonna charge you money for the app, and that means another revenue for them.
And that's what these things. That's what these major like big playmakers do.
Yep.
They make plays.
Exactly.
Apple will dive into different industries. We know Apple's heading into healthcare.
Yeah,
we know Apple's heading into
Microsoft too. When we talked about the CVS stuff,
you feel me? Right, we did mention that exactly. Mm-hmm. We got Apple heading into the car industry. They're gonna be making self-driving cars.
There it is. So these companies are obviously being innovative. They're growing, and they're already proven. So when they dip, as a piece of advice, what we're doing is we're buying. So I mean, you guys can figure out what that means. Read in between the lines.
If I'm copping Microsoft at 276. And you copping Microsoft at 350.
There's a big difference.
Who's gonna make more money?
Yeah, there's a big difference. And like even other companies, right? So we talked about Square, we talked about PayPal earlier, and they're kind of the same, and in the same world. So we're just talking about it. We're copping those too. We really do believe in digital currency. these two companies deal with digital currency, right? Both of them have reached their 52-week lows, so the lowest point in the year, right? Both of them are below its 200 EMAs, which Rel talked about, EMA. So when you see that, it's like, okay, the technicals make sense. Okay, I get it. But even look at the fundamentals, right? So don't just look at numbers. Look at what the companies are doing. It matters.
If anything, I would say fundamentals is really what matters more in this time period for Square and PayPal than it does the technicals, if anything. Because they're so far below like their 200-day EMA.
Yeah.
And you know, like that is to a point where it's like, okay, just like a lot of the market. A lot of the market is below its 200-day EMAs. You know, so fundamentals, especially in environments like this when everybody's scared, focus on the fundamentals. And that's why we've been stressing you guys, invest in great businesses.
And speaking of fundamentals, because you guys might be wondering, like, okay, do I buy Square? Do I buy PayPal? Honestly speaking, look at what they're doing. Like, and just look at the business, right? Balance sheets, all solid. They could pay off their debt, right? And then when you look at it, Square just announced a deal with DoorDash in Canada to be their payment sponsor. So right, so all their processing is going to go through Square. So that's big in Canada. So Square was like, yo, I know PayPal, you guys handle that with Venmo in the States, but we're going to go to Canada. The blue ocean strategy right there.
And yeah, bro, that shows them what? Global expansion.
Yeah, and then they got deals with Cash App with Klay Thompson, Draymond Green, Odell Beckham, right? So they're promoting that. They're getting the biggest names in sports, and they're saying, yo, we're going to pay you to do this so our name gets out there. You guys remember like the Hulu commercials with like Joel Embiid, we just pay you like Dame Lillard? That's kind of what they're doing. They're kind of still in the same model.
Yeah, and even like to like double down on the global expansion point too, like Square is talking about giving out loans in Australia, you know? Like Square also has plans in Spain.
It's not just Cash App, guys. It's so much more.
Yeah, they think
it's so much more. So much more.
They're big overseas. They're really diving into Europe, and so is PayPal. Both of them have a lot of work that they're doing overseas, which is huge.
Which is very big. Like, speaking of the overseas stuff, Amazon's a global company, right? PayPal has a partnership with Amazon that hasn't even kicked off yet. So just think about the revenue. I know people trip over the eBay news that happened, because if you guys don't know, eBay and PayPal used to do their thing together, but eBay decided to go somewhere else, right? So now, what did PayPal do? Go to Amazon. I personally rather rock with Amazon in the first place. So just think about that. In terms of global expansion, what you were talking about, it goes hand in hand.
Absolutely.
And also, PayPal did report its earnings. So let's talk about that really, really quickly. Earnings is basically when Wall Street is saying, yo, this is what I'm expecting you guys to do. So if I expect Rel to give me 30 points in a basketball game, and he comes back and gives me 28, he didn't meet my expectations. Is a 28, game bad though? Like I know Rel's trash, but like I would take a 28 from him. I'm not mad at him.
This guy, son.
So it's like
he can never guard me ever. He's never been able to guard me his whole life.
Oh wow, never. Never.
Why you think I sent him to the stock market?
Never. It's crazy.
I sent him off the basketball court.
It's crazy.
And I sent him to the stock market. Straight like that.
Anyways, let's just continue with this, right? So PayPal was, and this is the point that we're gonna make, right? PayPal was saying that they're going to grow revenue, right, between 15 to 17%. The Wall Street said, nah, yo. I expected 17.9%. Like, come on, it's not even that big of a deal. And if you look at what we talked about, the fundamentals, we're not going to go into it again, but they're obviously doing well. So, yes, they did have a pullback, right? But at the end of the day, follow DCA, follow fundamentals. If we think we're going to, invest in the company because it's a great company, we can't tell you what to do, but read in between the lines. Don't listen to random guys on YouTube right now. Just pay attention to what's going on. That's really what it comes down to. And at the end of the day, as we always say, investing in companies, right? So that kind of great companies. So that kind of covers our picks, right? Now in terms of upcoming news, so we have Google reporting, we have Amazon reporting, Facebook reporting, which we already said, they beat earnings, and then we have GM reporting as well. So definitely check those out, see what's happening in the market, see what's up. And in terms of bag talk news, you want to talk to them about it? What we just talked about on Rookie Mondays?
Rookie Mondays? Oh, yes. So think about it. We were just taking you guys through a whole investing rant just now. We told you about our picks and stuff like that. So you're probably thinking like, dang, how do these guys know when to buy, how to buy, and what to buy? Tune in to Rookie Mondays. Mondays, we headed into that section now. So Rookie Mondays, the first episode was the intro to what you can expect. We wanted to get you guys interested in financial literacy because this stuff is literally life-changing. Like, no drag. Change whole generations once you know how to think about this stuff. Episode 2, we got into budgeting. How much money do you have left after you pay your expenses? And then what could you do with that money? How much money should I invest with? Boom. Episode 3, now we headed into the investing section. We about to dive all the way in. You're going to learn everything you need to know about investing.
Yep.
Everything.
And it's going to be step by step, right? We're not going to just say, this is how you invest. No, we're going to tell you exactly how to invest and walk you through it. So you can definitely expect some great results. So make sure you tune in and check it out. We have a whole playlist ready for it. But that basically covers today's episode. As always, we appreciate you guys for tuning in. If you're still watching, thank you so much. Just make sure you have liked the video, you have already subscribed to our channel, and you click that little notification bell as well. And if you have not already downloaded our ebooks, right? So we have a stock market 101 ebook, we have a crypto 101 ebook, and we have that budget template that Rel was talking about from the budgeting.
I'm starting to think, like, how much do these cost again?
Oh yeah, they're free. Like, by the way, they're completely free for you guys. Oh, all right. So you guys have no excuses, man. But honestly, we love giving you guys all the advice possible. But we're gonna check out right now, and we're gonna see you guys on Monday for Rookie Mondays. But until then, peace.
Peace.